Hi, my name is Lucas. I help run Capitalist Exploits, and today we're going to look at the target audience for Insider. So, without any further ado, let's talk about demographics of Insider, the nitty gritty. Men make up probably, I would say, 90 to 95% of the customers we have, and they tend to be 35 years old or older. And one reason for that is typically older people are wealthier because they've had more of a chance to save up, or they've had more life experience, or they've built a business, or whatever the case may be. They tend to be older people. So we don't get many 18-year-olds signing up to Insider. It would be rare. We do have students approach us wanting to join, but they don't have the capital to deploy, so it doesn't really make sense for them to join. But one thing they tend to have in common is they earn quite a high amount of money. We do have a small amount of people who join just because they enjoy reading the research and the commentary that we publish. But in order to make use of the product, I would say you would need probably $30,000 to invest in the ideas for it to kind of work the way we invest anyway. We certainly do have people joining and who just pick one or two ideas out of 70 and just go, I'm just going to go for that. That's fine. But we say that, we're recommending these things on the basis that that people are adopting a similar strategy to us. So in order to have 30 grand lying around, you need to be wealthier than the average person. And we tend to find that, professionals in high-paying jobs, so management-level professionals or technical employees like engineers, then there's like dentists, lawyers, doctors, and that kind of, they're all in one kind of bubble. Then there's business owners who've sold a business and they're sitting on a lump of money and they're like, I need to do something with this. I'll sign up. Or there'll be people who might have come into some money either through inheritance. They might have sold a house. They might have sold an asset. And they're looking, again, at ways of investing that capital so that they're not squandering it away. The US makes up about half of our customers. It doesn't really matter which countries our subscribers come from. I think we've got there's certainly over 50 countries in the subscriber base. Most of them come from the US. Then a lot will come from UK, Australia, New Zealand, Canada, English-speaking countries basically. And that's followed by English speakers in Western Europe and Asian countries as well. Not really anyone from the Middle East much, or Africa. It tends to be those areas, but the service itself can be used by anyone who has access to an online brokerage account, basically. In terms of political leaning, conservative, so to the right, have many libertarians. Lots of people that read our blog and stuff are libertarians, and they don't mind telling us so in the comment section of our articles and so forth. So it's conservatives who tend to have a lot of money and tend to be men over 35 and tend to come from English-speaking countries. Let's get into psychographics. If you don't know what psychographics are, I find them helpful because they demographics tell you the raw data of where someone comes from, how old they are, blah, 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 male, female. Psychographics is actually a lot more interesting because it puts a person to the statistic, I find. So, big thing is people being distrustful of government and financial markets. This may not come as a surprise to you, and this is becoming more of an issue just across the world generally. You throw media in there as well, but basically people don't really believe that the model that government have, like work all your life, retire, and then we'll pay a pension. They think that model's broken. A lot of our customers do anyway. And it's the same thing with financial markets. They are skeptical of how financial markets are regulated, and there seems to be one set of rules for the people at the top, and us down here get a separate set of rules. They'll talk about markets being manipulated. All this kind of stuff feeds into this kind of paranoia that they have to control their financial future, and they can't trust anyone to do that for them. And this is a very big theme, and I think it's going to be a growing theme as we get on the next 10 years or so, and we have more calamities in the market. So these people kind of find refuge with us because we explain things to them in a way that is not so political or not so conspiratorial, all of the kind of sensationalist kind of language that authors often use when they discuss markets and governments and manipulation in the markets and stuff. We are investors, so while we sympathize with all that, and no doubt, the whole world's rigged, really, if you want to be truthful about it, everything's rigged in some way, right? So the real question is, how do you make money from it? And so we spend less time talking about whether markets are rigged and this person should go to jail and I can't believe this happened, and more time on like, this shit's gonna happen anyway, how do you make money from it? People tend to be very worried about their retirement plans. So their pension plans or their superannuation funds, if you're from Australia, it's a growing consensus that the numbers don't stack up in many pension systems across the world. So there is this kind of worry about, what's the future going to hold? People are looking for things like our stuff, which is like, hey, yes, the world's fucked up. Here's how you make money from it. Our subscribers generally tend to think of themselves as more intelligent, not just than the average person, but the average investor. So I think that's fueled by the type of people we have join. There's many people on our forum and stuff that are money managers, hedge fund managers, friends of Chris, and people who are really competent and really intelligent and are experts in their fields. Often will come into the forum and discuss things with other people, and so it's kind of like an exclusive club, I guess you'd call it. And there is a bit of that kind of elitism among our subscribers when they talk about the rest of the world. Our customers are generally supportive of crypto and blockchain, and by that I mean they see the utility and the value in blockchain technology. We tend to just say buy Bitcoin. It's the safest and the safest bet, we think. That's been our position since we launched in 2016, and both Chris and I bought Bitcoin back in the day. So we are generally supportive of blockchain crypto, but it's not a focus for us insofar as we're not trying to identify the new opportunities, in ICOs or STOs or on the blockchain or with altcoins or anything like that. We steer clear of that because these markets are so new and untested that it's too risky for us to meddle in. So we say buy Bitcoin, but that's it. So this is a big one, right? So there is no end to the amount of crap that's littering the internet with clickbaity shit, right? And tends to be, going back to what we were talking about before, this idea of retail versus institutional or professional research. Retail research and retail newsletters and investing newsletters and stuff, they're all about pumping up hype and getting people to sign up for stuff at a cheap rate. And when people subscribe to them, they'll quickly find out that it's not all it's cracked up to be, or it loses them money or whatever. Our customers, most of them have signed up to these sorts of financial newsletters before, the kind of $47 a year ones, and they're super sensitive to them. They hate them. They're like, the one thing they like about us is we don't do any of that. We over-deliver. We provide value far, far greater than the subscription price, and we make sure they're happy. If anyone's not happy, we take care of our customers. So that's kind of refreshing for people. This is a small business. There's people in the back office who will talk to our customers. We tend to reply to them within an hour, or certainly within the same day. So there's this kind of like refreshing view that they have that we're not just another company selling hype. And a lot of the time, we'll have people come in who are looking to find something that complements their sphere of competence, the stuff they already know. So by this I mean an FX investor, someone who trades currencies in and out every, with trades that last seconds or minutes or less. They've been doing it for 10 years. They've started running out of money or not being able to make money because their strategy fails or whatever. So they look for something else. Or it's the real estate investor who's like buying property, selling property, realizes that properties are pretty expensive. It's hard to just flip houses. So what am I going to do? Or it's the person who's worked in, or it's a person who run a business and makes umbrellas. And it's an umbrella maker. He's made umbrellas, sold his business, and doesn't want to go into making umbrellas anymore. Sitting on a bunch of money. So he's like, what am I going to do? These are the people I'm talking about where they've made money and they're wealthy. They might be, very competent people and businessmen or business people, but they realize that whatever they're doing at that time won't make them more money. So they look for something else. And we really appeal to those people because, they can tell by what we blog about and everything like that where there's intelligent people behind it, and, the track record and the people behind it are good. So that gives them a kind of something to latch onto. Okay, so that's the first half done. Now, this might be tedious, but I'm just going to do it because it'll be really useful for you in terms of finding out what customers actually join and who they are, right? So what I've done here is I've just taken a sample of posts people have made in our Slack channel, in our investors forum, when they join. And we encourage them to go in there and say, hey, I'm new to Insider or whatever. Here's what I do and here's why I joined. So I took a sample of these sorts of posts from our actual subscribers, highlighted some text that's relevant in every paragraph. I'm just going to talk around it. And the reason I'm doing this, it is long and protracted, I realize, but I want you to understand, who actually buys, right, and why they buy. Because you as a marketer might find this very helpful in terms of structuring how you kind of promote capitalist exploits and Insider. So without any further ado, let's get in. I joined last night and I work in IT as a consultant. Been investing on and off for 15 years, made some, lost some, but never really been able to consistently make good life-changing returns. So here I am to learn just that. So this dude is a person who has tried a lot of stuff, probably earns good money as an IT consultant, and they're looking for idea generation, like ideas that they wouldn't have thought of to invest in. I work as a consultant in operational risk and spend most of my career in risk management as well as real estate. Having done some investing in the last 10 years, I realize my time horizon is years instead of months. I share the concept of asymmetric investing and exploiting the bottom/top of the cycles. This is mainly the reason why I have joined. Okay, so we've got another consultant here in operational risk and real estate. I'm guessing that they tried to trade short-term strategies, and so it might be stocks, or it might be chasing trends, it might be forex or whatever, and realized that actually winning in that game is very difficult. So when if you think about it, and there's a very famous statistic in this whole thing where in the 60s, I think it was, the average hold time for an investment in the New York Stock Exchange was 8 years and 3 months or something like that. So the average hold period, so you buy a stock and you hold it for 8 years, that was the average. Now I think it's 3 months. And because of this, because that's the average, right, on the New York Stock Exchange, by its very nature, doing something different to that, so investing long-term, is contrarian, because not many people are actually doing that. So this person's realized that and realized that that's where the returns are, or that's where he can have an edge. And he found us, and we're all about that. Many of our trades are 3 years, 5 years, some up to 10 years away. So he latched onto that straight away, probably, and gone, right, that's a good thing to buy because it's right up my alley. Okay, we've had someone who was a developer in the dot-com boom. Whoa, that's pretty cool. In the UK and settled in Greece. So back in 2011, a junior developer and I had on my team told me about Bitcoin. So I got into crypto. I lost a big chunk of my Bitcoin at Mt. Gox scam. Side note, so did I, and I'm still writing to Japanese lawyers about it. And I still want to get something back. Me too. I participated into the Ethereum ICO back in 2014. I've sold a good part of my stack at low prices due to the fact that I needed funds to keep afloat two businesses I had, as banks here locked our funds, and we had for some months inability to pay for raw materials in order to run the business. Interesting. All in all, I've got burned from the above, and I've decided to take a break from one of the activities in order to run the other two businesses I have and take a breath. I'm in the situation right now to organizing my finances a bit and putting some of my money at work in order to spread some risk. So here's a person who got rich with their development skills in the dot-com boom, in IT, then probably got rich again after they lost Bitcoin in Mt. Gox, which was a Japanese brokerage firm that famously went down, probably one of the first ones or the first big ones. And he participated in the Ethereum ICO, which would have been good to do. So he probably made a bunch of money and been pumping it into his businesses. Don't know, maybe he was in Cyprus when all that shit went down back there and banks froze companies' assets. I'm not sure. Anyway, so he is looking for something outside of his sphere of confidence, or her. They're looking for something outside of the sphere of their confidence, right? So they are also looking for something to spread risk and probably spread opportunity as well, I'd say. So here's a senior technologist working in the software industry, well versed into AI, and he's even put a robot emoji there, and cloud computing. I joined Capitalist Exploits because I understand the bullish market may come to an end soon and wanted to diversify and hedge my portfolio with low correlated trades and earn alpha. Going back to what I said about being distrustful of government/market manipulation. So this person is a value-driven value investor, which means they like hard assets and they like things like commodities, and they like companies that are actually valuable, and not your WeWorks or Netflixes or Teslas of the world, which aren't profitable. And so this person has seen that the markets, they consider the market to be in a bubble. All of our trades are not popular trades. They're not trades that you would hear about elsewhere, and they're in sectors and themes that basically you just don't ever hear mentioned in the mainstream media or even the alternative financial media. So they kind of clicked with that and joined on that basis. Living all around the world by the look of it. So here we have a 36-year-old clinical psychologist, psychology lecturer as well. Okay, this person's impressed with the high quality discussions and content that is being offered on both the newsletter and in the community. I always swing traded US stocks, but decided to join Insider this year because I lack time due to my professional activities. And this is a really good point as well. What we deliver is basically 24/7 research business, right? So if you're an investor and you're sitting in a pile of money, one of the problems you have is putting in the time to understanding what you should be investing in. And that's often what investors say when they're doing work. They're doing research and it's not easy to do. And if you're investing in something that's not well understood by you, you have to go and do the actual research to find out about it and evaluate it in order to determine whether you're going to invest in it or not, right? So we have a team of analysts around the world, and we outsource most of that function to experts in their fields. And so because of that, this person's getting all of this information and research that they otherwise would have to have done into trades, complete with like, here's where to go, here's the ticker, the symbol we're buying, here's how to buy it, here are some alternative ways to structure the trade, all that kind of stuff. So this just gives you a real world example of that. Like it saves people time because We're doing all the research and packaging this thing up in a report for them. Moving on. So this is a subscriber who's worked in a big four accountancy firm, so KPMG or PricewaterhouseCoopers or a similar company. They've also worked in a Japanese bank. They live in Washington, D.C. Over the past year, I've most enjoyed the capitalist exploits investing style and approach to analysing macro trends. I've been investing in the markets for a decade now and have seen a meaningful impact to my portfolio from risk management and return perspective as I continue to expand my knowledge and skills from what I learned reading capitalist exploits. Looking forward to being a more active participant in the community and learning from everyone. Happy to contribute what I can based on my professional background. So here is a person who basically just liked our shtick and signed up because of that. Working for a big four consultancy firm, traveling the world and living in different places and working in a Japanese bank probably means that this person has capital to invest. And so in looking for things on the internet, probably stumbled on our blog, I would say, and liked our whole style and signed up on that basis. So this is a case of, I would guess this is a case of someone finding us through the content, blog posts and stuff like that, and signing up on that basis. So here, this next example is someone who joined both Insider and Resource Insider about a month ago. I'm 32 years old and spent the last few years as a full-time real estate investor / manufactured home dealer here in the US. I'm still very active in that world. However, with real estate pretty bubbly right now, I made the decision to allocate capital in other directions and thus made the jump to Chris's fantastic services. I've been on an 18-month-long binge of everything macroeconomics, and while benefiting from many other authors and thinkers, I ultimately found Chris, and now Jamie, to be among the most sober / intelligent / purposeful / high integrity ones I came across. Oh my gosh, they must be blushing. And thus decided to join these two services and allocate a decent portion of my wife and I's capital to the opportunities presented herein. So this goes back to the sphere of competence thing I was talking about. So this person, and it also goes into the markets as well. This person's a real estate investor, knows that business probably very well, considering they're a manufactured home dealer as well. They know everything about real estate. They also know that lately it's become harder to flip houses probably, and so they're looking for something else. They're like, we're not going to be able to make money here forever, and they like macroeconomics, which many people do because it's macroeconomics is about stories really. It's about the news and politics and stuff like that. I've mostly worked in strategy consulting and bankruptcy / restructuring law, interested in the asymmetric upside investing in distressed / bankrupt assets. This is interesting actually, because although this is not very long at all, there's one big clue here that tells me this person, they've worked in bankruptcy / restructuring law, and they're interested in investing in distressed / bankrupt assets. Most of the themes that we have, or the sectors that we're investing in, most of them have been slammed since the GFC, since 2007, 2008. Most of the charts of the sectors we're investing in just go fall off sideways, and we think they're about to go like that, which is why we're investing in them, right? So what's interesting here is this person's worked in strategy consulting and bankruptcy restructuring law, and they've probably had direct experience where a company has been close to bankruptcy or has gone bankrupt, and other investors will come in and buy that company and turn it around and make a bunch of money, right? That's what that kind of field of work is all about. And so it's interesting because that's kind of how we're investing as well. We're looking for very cheap, very profitable businesses or assets that for whatever reason are very valuable and are cheap, and we're buying them and waiting basically, and we're doing it in different ways. So that's probably what turned this person on. They see in their practical life that that's That's what happens when new investors come in and start investing in companies who've gone bankrupt or have been close to going bankrupt. They're in distress. They need they'll be able to strike great deals because they're in the positions they are. They might be great companies, but the CEO might have run off with a bunch of money or someone's wife or something. And so for whatever reason, even though the company's amazing, they're in this situation and they'll be taken over by new people. New investors will come in, create a lot of value, sell it and make a bunch of money. So that's interesting. This guy stumbled upon capitalist exploits via a newsletter and have been learning a ton ever since. I'm a rather new investor, so excited to understand more from your personal interests are tech broadly, working fintech, crypto, now learning tons on commodities. So stumbled upon CapEx, probably read an article and thought, oh, that's really cool. And then eventually bought and were quite happy they did so. Again, working in tech, but in now learning tons on commodities. So it's interesting because tech and commodities don't really go hand in hand, but there's a lot to be said about looking at things no one else is looking at. And right now, no one's looking at commodities. So this person's obviously very savvy. They like commodities and now they're learning a ton on it because they want to invest in it, obviously, and they're using our services to help them do that. I've been a big fan of non-mainstream investment ideas, better than passive income returns. I don't know what they mean by that, but whatever. And previously enjoyed the work of people like Jim Rogers. Trying to find this type of information led me to Chris's work. I've been reading the newsletter for a year and finally got insider to a better grasp of opportunities in commodities. I'm really enjoying the contrarian views in Insider and look forward to learning along the way. So there's also a common theme here, which is the education side of things. Chris has started and sold multi-million-dollar companies, multiple times. He's been a real estate investor and made, I think he did 64 times return on investment in that business. He's worked for investment banks. So he's been an entrepreneur. He's run a hedge fund. He's run a venture capital firm. He's done all this stuff, right? And so when you get to that level, then you turn into someone worth listening to because you're a real world example of someone who's been successful in investing. So a lot of these people will be, a subset of this whole thing is this, or a common theme is people wanting to learn about managing money and across disciplines, right? Not just in one very specific way, but looking at the world as an investor. And that's, a byproduct of this service. Just in the research we do and how we structure things, people become, or people just get a lot of exposure to the methodology we use and things like that. So going back here into this paragraph, I have a feeling this person likes Jim Rogers. There are a bunch of talking heads, I call them, no disrespect intended towards Jim Rogers or any of the people I'm about to mention, but I just want to mention them in terms of how they're marketed, right? Because it's a lot different. Being a guru like Jim Rogers, who else? Peter Schiff, Mike Maloney, Robert Kiyosaki, Doug Casey, some of these names you might know, right? These people are, and Kyle Bass even, I'd put him into this category, they're marketers first and foremost, right? Now, Jim Rogers has had an amazing career, and I don't mean to take anything away from him, but he's been a lot wrong about a lot of stuff as well as being right. He happened to make $1 bajillion back in the day, which cemented his position as a famous person. But the amount of amazing investors there are in the world, you probably don't know about them because they probably wouldn't want to draw attention to themselves, and they're very few in number. And people that like to go on media and talk on, sin and money and stuff like that, they're people with an agenda, right? And so I'm saying this because I have a feeling that this person likes the content of people like Jim Rogers or say Peter Schiff, right? Peter Schiff is a gold bug who's been saying buy gold for, ever since I started listening to him or becoming aware of him. And he's been saying the same thing for 15 years. And at the time of recording this, if you'd bought gold a year ago, it would have been a wise thing to do. or buying gold now is probably a very wise thing to do because it's gone up in price a bit lately. But he's been saying it for the best part of 20 years. And so if you'd have done that, you basically would have gone sideways for like a large part of that and lost 20 years as an investor. So going back to this paragraph here, I understand what this person's saying, because he's like, while he likes listening to people like that, Jim Rickards is another one as well. It's great hearing what they have to say, but applying investments based on what they say is impossible, because they just come out with blanket statements about the economy, right? They don't tell you how to invest to make money based on what they're saying. And this is the difference between what we do and what other people do. And this is the reason why this person likes our work, because we actually say, here's a messed up situation, here's how to make money from it. I've spent probably too much time listening to alternative media now and have a better understanding of just how crazy things have gotten. Therefore, I've spent the past 18 months watching things from the sidelines, trying my best to educate myself on how financial systems/markets work. None of this comes easily to me, so I'm hoping to use these forums to further increase my understanding, as I've decided to switch to a self-managed superannuation, i.e. retirement fund, and take responsibility for the decisions that will affect my retirement savings. I stumbled on cryptos about a year ago and now looking to expand into other areas as well. This goes back to the theme that I was talking about at the start, where distrustful of markets, distrustful of government, distrustful of pensions. Superannuation is a pension in Australia, and people can manage their own or have these big companies manage their pensions for them. We don't like the idea of having other people manage our money, so this person probably came across our stuff and was like, I should manage my own money because I don't think these people have the best intentions for me at heart. So, this is about education as well, educating themselves, and they've gone down a rabbit hole at some point and found out how the world really works and come out the other end going, I need to take control of my finances, basically. So they signed up to us. Okay, this dude is a stunt performer, which is awesome. I have zero experience with the share market, but good risk management due to my career. You don't say. I've realized that although I can pull a great wage for my work, it is what I do with it that will secure my family's future financially. I've recently sold a commercial property and have money to invest, and have decided to stay away from property as we do not know where we will settle down. Looks like I may be working in New York City come July. So, classic example of someone who's disposed of an asset and is now sitting on a bunch of money and doesn't know what to do with it. This guy's a stunt guy, so he's probably, although he says he's good at risk management, he doesn't mind risk. So he's like, probably saw 10x returns with capitalist exploits and was like, I'm in. I'm a retail Forex trader, and reading all the fantastic newsletters from Capitalist Exploits made me consider entering the grand world of stocks, options, and also to exchange thoughts and knowledge in the business, since I've never bought a single stock except putting on trades on the major indices in the form of CFDs, where you actually don't own the stuff you buy or sell. Sphere of competence case here. FX trader, probably finding it hard to make money now with interest rates, all essentially doing the same thing. So this is probably a case of someone wanting to increase their sphere of competence by being exposed to investing in other things than Forex, making huge assumptions, and I feel like almost apologizing to this anonymous person, but I'm just using this as an example of why someone would, right? So just trying to set the scene for you. I work for a buy-side firm doing a little bit of fund marketing, sales support, client servicing. I've been reading CapEx for a while now. Finally decided to join Insider after seeing so many excellent reviews. So this is someone who works in the industry, obviously, and they saw all of our excellent reviews on Trustpilot and decided to buy based on that. And I should mention actually that, because we go out of our way to make sure the wrong people don't sign up, we tend to only get the right people continuing with the service and really enjoying it. And that's why we have such such a high proportion of good reviews versus other companies. After some years at PwC and afterwards in 2 corporations, I do investing full-time for a family office now. I've been investing at the markets for more than 20 years. Primarily, I'm a value investor, which is difficult these days. Amen. I enjoy being part of the community and have learned lots of new approaches here so far. This is an example of someone who would not blink at buying Insider because they're running a family office, and a family office, if you don't know, is just it's like a business set up to manage one family's fortune. And usually you'll have, part of that will be about investing and growing the actual fund. So people in these sorts of setups will typically look for ideas that are not mainstream, and so it's kind of perfect for that kind of thing. So I would strongly encourage people to go after family offices for our ideas, because it tends to be that once they get a bit of marketing from us, once they read a report or two, they are sold and they're like, oh, this is awesome. Even if they don't use any ideas, they just want to get the ideas through on email. It tends to be. So let's just recap before we go on the types of customers that we tend to attract. Professional money managers wanting new ideas, like the guy we just heard from. There are many of these people: hedge fund managers, people who run family offices, people who work in investment banks. Then there's people who come into money with zero investing experience. So that might be people who are lucky enough to invest in Bitcoin back in the day, people who have just been awarded a large inheritance, people who have disposed of a property and they're just sitting on cash, don't want to go back into property, these sorts of people. Existing fans of the content and want more than just the free newsletter. These are people that write articles, people that read our articles on the blog and sign up and really like the content and just buy based off the content. We have a lot of those. They're just organic sales dribble in. Investors who are specialized in one area, who want to expand their activities. It's that whole sphere of competence thing we've been chatting about. People who have been investing in or whatever, doing one thing their whole lives or for a long time, want to do other stuff but don't know where to start. Those who are captivated by the strategy of asymmetry. So these are fans of our risk management, basically, and how we actually structure trades and how we actually structure our portfolio. There's a whole group of people who are really interested in that. And with that is the commencement of this presentation. I'm sorry I took so long. I hope you enjoyed it and I hope you got some real insight out of it. And if you have any questions or feel that I didn't cover anything fully or want sessions like this on other stuff, please just email me and suggest what I can do to make it easy for you. Other than that, thank you for being one of our partners, and I look forward to speaking with you soon.